What's up, bullish people? What's up, what's up, what's up? Good evening. How's everyone doing? All right, let's get this stream out there to the world. Let's get this this beautiful stream out there to the world. Potentially the best stream in the world right now. Yeah, okay. Let me focus. It has to be done real quick. And good evening, everybody. Of course. Hope you're all having a great week so far. Hopefully, it's going to get better in the next 30 minutes. We already had some nice volatility, as you can see right here. Not too much, but the volume spiked up quite high. Okay. Give me a second. Give me a second to send it everywhere. That we are live. What time is it? 19:24. Starting in 5 minutes. Wow, okay, I'm a little bit late. Excuse me. Okay, I send it everywhere. Everybody should have received the live stream right now. We're looking at the chart right here. Bitcoin is looking pretty decent. But first of all, thank you for joining the stream. Thank you for joining the stream once again. I'm happy to see you all here. We're going to do a full stream update here on the FOMC meeting, and then mainly the Federal Reserve press conference. All right, some of you might already know this, but we look at the press conference together. And when something interesting is being said, I'll tell you, all right, well, this is interesting and this is bullish or bullish, whatever you want to call it, or this is bearish. And then based on that, we will go through the entire press conference, and then afterwards maybe we'll do some analysis. I mean, that's a possibility. I mean, today of course the talk of the town has been XRP. I personally also did buy some XRP earlier. But I sold the position. I'm out of XRP for now. So maybe we'll still see some continued bullish pressure a little bit later. That's a possibility, especially if the Ripple appeal actually holds up in court. But that's for later, and that's definitely well. I mean, XRP might move with the Federal Reserve press conference and what they'll say. But that's it's unlikely to rally up higher than Bitcoin, for example, right? I mean, Bitcoin is going to be our main focus. As you can see right now, we're at a pretty substantial resistance level here. We want to break above that. We want to break above that with volume, and we want to have some good news in general. All right, we kind of do deserve it. All right. We deserve some bullish times. We deserve to make some make some money. We're still doing that, but we deserve to have some great times in general. I think, at least. All right. All right. Well, here we have the Federal Reserve press conference. We'll take a look at that when it's actually live. You should be able to hear the audio as well. Not right now, I think. Let me quickly test that out as well. Yeah, okay. No, it's just elevator music for now. All right. Let me go through some chats. What's up, Pakistan? What's up, Indonesia? What's up, Dubai? The entire world, come on now. The entire world united around one interest rate decision press conference. Isn't it beautiful? Mensko, I don't know. I think it's too early for quantitative easing. I think it's too early. I think we'll have to see a little bit more pain before that. Foko, the main thing, look, that the rates have stayed the same, that was already known, right? So that's also why it's causing some volatility, but it's not really causing that much of a movement. What's going to be crucial is what Jerome Powell, our big friend, hopefully, will say during the press conference, all right? And then it's mainly about the monetary policy. I believe it came out that they expect 2 rate cuts for 2025. What we want to hear is that there's more room for potential rate cuts in 2025 to potentially have 3 or 4, which is going to be difficult, but it's a possibility. Because the more rate cuts we have, the more bullish it is for the markets. Look at this. From Kentucky to Mexico, Norway to Germany, Ukraine even. Russia and Ukraine watching the live stream. I better not say too much about that right now. But I love to have you all here on the stream, guys. Also, apologies again for my videos this morning. I mean, I recorded. I was at my parents' house, and I recorded the videos, and I recorded it on my laptop, and the audio input it grabbed was completely fucked, and that's where the monetization goes away. But therefore it wasn't great. So apologies for that. So, but hopefully there still was a little bit of value to be gained from it, but I'm not sure. I mean, the audio was absolutely horrendous. Mr. Breibroiki is also in the chat. What's up, man? How are you doing? Is there football today? I know the Dutch team is playing one of these days, but I didn't think it was right today, right? Is there football tomorrow? Excuse the voice crack. I think it's tomorrow, or I just don't know what I'm talking about. Press conference has it. Oh, there we go. All right, everybody, we're going to watch the press conference. When he says something interesting, I will report back, but I will mute myself for the time being. You should be able to hear this. Let me know.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee.
Let me know if the audio is alright or if I should turn the audio up or not.
Decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated.
Okay, nothing interesting yet. I will tune back in if something interesting is being said. Although the overall tone is slightly bullish.
Over the 12 months ending in February, and that excluding the volatile food and energy categories.
En ik ben zeker Nederlands.
Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward.
Okay, so far nothing is being said. I mean, basically everything he says doesn't really have an impact on the markets. That's also why it's still relatively stable. He talked a little bit about the tariffs, etc., and the immigration policy. I would love for him to talk a little bit more about that, but so far he has just said what he always says, right? So we'll look at all the economic data and make decisions based on that. And we just saw what most of the Federal Reserve members want for 2025, and that's 2 rate cuts, which we'll take a look at some probabilities in a moment, but that's also still the same as last time.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market
Okay, this is slightly bullish.
Reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment.
Yeah, all right. I don't know, guys. It doesn't sound that bullish to me. It's just very neutral. He basically hasn't said anything. All right. He just said he just explained what they're doing right now with the monetary policy. He said, we can change it quickly based on the economic data. But at this point of time, he's just he didn't really say anything meaningful about the monetary policy. He didn't say anything meaningful about. He did reinstate that the inflation rate is the most important, and it's not really about employment data. But he said that the last time as well, so that's not new data. But let's see if we get some interesting. Questions here.
Is tariff. So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being
Hopefully
well
we still get some sort of an interesting question.
I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but...
Listen, one thing, she is always allowed to ask a question. What is this? Every meeting that I watch, she can ask a question.
This is households and forecasters.
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not
All right, that doesn't really matter, I think. Look, I don't think it's staged, by the way, guys. I don't think all these questions, etc., are staged. Some of them actually catch people off guard sometimes. But, all right, I doubt whether there are going to be more interesting questions. Usually, the longer it goes on, the more he just starts giving the same answers. But the situation is this, all right? So do a recap of what's going on right now and what the situation is. The situation is that the interest rates remained the same, all right? So the interest rates are still 4.5%. And then what's expected for 2025 is that we'll have 2 rate cuts, all right? So that basically at the end of 2025, the interest rate is between 3.75 and 4%. That was already known, all right? That was already the situation. Back in January, we already knew that was the most likely scenario. But now, look, the thing is that, all right, if you take a look at Bitcoin, the thing is that Bitcoin is finding fair value right now around this level right here at 83,000. So I think we almost have to conclude that this whole interest rate decision and the press conference do not matter, or at least that the results, or at least that the actual what they're saying, he's basically saying nothing, right? So we cannot really derive anything from that. If you take a look at the probabilities right here, what you can see is that we still, for the next meeting, we do not expect a rate cut. We expect a rate cut the 18th of June. And then we expect the second rate cut in September. But as you can see right here, the rate cuts still seem, or at least this is still expecting 2 rate cuts. So at this point of time, there isn't anything that has changed. So Bitcoin was finding fair value around 83,000. I think Bitcoin will continue to do that. And then if we see some sort of a change in the probabilities of 3 or 4 rate cuts, if it gets more probable, we can actually get a bullish breakout. If it gets less probable, we'll probably drop down lower. And now, to be quite honest with all of you, the main indicator or the main instrument that was pushing Bitcoin up and down was the stock market. All right, and the stock market at this point of time today was quite strong, and I expect this to continue to be bullish. Right, or at least I expect this. I expect the stock market to actually reclaim this level right here at 569, and to at least get some more stability a little bit higher. So therefore, like in very short wording, this Federal Reserve interest rate decision and the press conference do not matter unless he's going to say something different, which we might be missing right now. So this press conference doesn't matter. But based on what I expect from the stock market, and that's based on what I think about the tariffs, I don't think the tariffs matter that much, right? I don't think that the American economy, which has done very, very well in the last couple of years, I don't think that's going to all of a sudden be in a decline, right? So therefore, I think this reaction by the stock market was an overreaction. I expect more bullish momentum from the stock market. That's why I expect Bitcoin to rally up higher as well. So I'm actually still slightly bullish on Bitcoin. I just don't think that the monetary policy aspect is changing anything at this point of time. Some new tariffs coming. Some new tariffs are coming the 2nd of April. But that's for now it's priced in. But who knows what will happen in the days before that. Yeah, okay. Let's tune back in real quick. New question.
Mr. Chairman, Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature that has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other? In
labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
All right, well, that was quite interesting, I would say. So if you missed that, he basically answered a question about the potential economic implications of what's going on right now, right, with the tariffs and the layoffs going on. He said that the layoffs that Doge is doing, the Department of Government Efficiency, will most likely not affect employment data that much, which I think was already known, but I think that's positive, at least for the markets. I mean, obviously, it's a controversial topic, so I won't go into depth about it. But that's at least positive, because what a lot of people were expecting were that and about the tariffs. He also said that there were some things like goods inflation went up. But he couldn't prescribe that to the tariffs yet, so that's also something that isn't proven yet. And what he said about that, I mean, in general, the main thing that he said is that they don't know yet, and that they will find out with economic data in the future, and that's also the truth, right? I mean, we're going to get more economic data in the next couple of months, and then we'll know more about the actual effects of the tariffs and the layoffs. But for now, like I said, he's at least not taking it into account with the monetary policy. Well, Jay Swag, I think it's controversial. I know which side you are on, but it's still controversial in some places. But it doesn't matter. I mean, it is what it is. So a lot of talk about XRP. I wanted to give you my thoughts on XRP as well, because there's some interesting things, and I think people are kind of I'm not 100% sure what's going on right now with XRP. But at least as far as I know, and we'll take a look at Bitcoin in a moment, and when we're finishing the stream. But if we're taking a look at XRP right now, I believe, or at least one of the key reasons why I think the price hasn't spiked up more than some people were expecting, is that I believe the SEC dropped their appeal of the appeal of Ripple. All right, if that makes sense. But no, I mean back in August. Back in August, we had the judgment, of course, judgment by Judge Torres, which part of that was that XRP or Ripple was not able to sell XRP to institutions again, and they had to pay, I think, $125 million to the SEC for what they did. The XRP appealed that judgment, appealed that decision, and then the SEC appealed the appeal that Ripple did. All right, and now what the SEC has done is they have dropped that appeal. But I think the appeal of Ripple on that judgment from August, hopefully you're still following me here, I think that's still in play. All right, so it is still a possibility that Ripple doesn't have to pay that $100 million fine, and that Ripple can potentially still sell XRP to institutions. So therefore, it's not completely over yet. But that's at least what I've heard. All right. That's at least what I've heard from multiple sources, and from what I know from the case. I mean, I still remember back in October, the SEC did their appeal on a couple of days before the final deadline. So I still think that there actually is a major bullish catalyst for Ripple. So even though we haven't pumped that much, it has been a pretty strong pump, and we've been able to break above the POC area right here between 2.45 and 2.41. And I still think that we can get more of an update, and I think we can still get more out of the case. So don't write XRP off too much yet. So did we miss something, or why is Bitcoin pumping right now? Did I miss something? What did I miss? Did we exit it too early? Yeah, I look at the chart. I'm looking at the chart right now. But I'm not sure if I missed something. I mean, we can take a look at the dollar strength index here. Is the dollar strength index doing anything? Dropped down a fair bit, but outside of that, not much. Did he say something about Bitcoin? Yeah, we must. I'm not sure if we. Well, I'm not sure if we missed something. I mean, sometimes what happens is that he says one thing about crypto in the press conference, and that the entire market pumps just because. Just because the market is always likes when Jerome Powell says something like that. But I'm not sure if we actually missed something. It's pretty thin right here as well. I don't know. I mean, the dollar strength index is not really doing anything. So if he would have said something very bullish regarding the monetary policy, we would have seen a continued drop with the dollar strength index, and that's not the case. So I'm not sure whether this is real or not. But we're going to finish the stream for those of you. No, that's not true. Jerome, where's this information coming from? We just watched it. He did not say that the inflation was partially due to President Trump's tariffs. He said that there was a lot of goods inflation and that it was potentially an indirect effect of the tariffs. He did not say it was because of the tariffs. That's not true. That's fake news. That's the fake media. But all right, no, we're going to finish this stream. I mean, a brief summary for those of you who are watching a little bit later. Yeah, Watch Your Guru is the worst source on that there is on crypto. It's not true. Everything, or at least most things that Watch Your Guru says, are just headline news. It's not true. Watch Your Guru, please block Watch Your Guru because they make money on these controversial headlines. That's not what he said. He did not say that the inflation was because of the tariffs. But there's some alerts going on. All right. Fala network is doing well. But no, a brief summary. Federal Reserve interest rate stays the same. The press conference was relatively neutral. I am still relatively bullish on Bitcoin, but that is mostly based upon my thoughts on the tariffs and therefore also my thoughts on the S&P 500, which basically is that I think we will recover, all right? So that the S&P 500 is going higher, and that's going to pull Bitcoin together with it. So I'm not sure if we missed something major here, but I think ultimately, look, I would be careful, right? So to end this stream, please be careful. The movements we're seeing right now are nice, and they're with quite a lot of volume, which is tempting me to say that this is a real breakout. But please still be careful, right? Especially the couple of hours after the FOMC, after the Federal Reserve interest rate decision, can be massively volatile. All right, so look, if this is a real bullish breakout, you will have opportunities tomorrow as well. All right. If you will not have opportunities tomorrow to long things or to potentially catch a retest for Bitcoin, then this wasn't a real move. All right. So please be patient. Do not get caught with FOMO. I do expect Bitcoin to move up to 88 and 90,000 because I expect a bullish stock market. However, we could short term still see a spike down as well. All right. So be prepared for that. And just in general, take that into consideration if you're trading. Well, Jerome, I haven't seen the video, but at least what I've seen from the press conference, he talked about the tariffs quite a lot. and about and about what they could potentially do, and he never said definitively that the tariffs caused inflation. So I'm wondering which video it is, but it's at least not what I've heard, and I think it's twisting the words a little bit. But I could be wrong. Who knows? I can always be wrong. But that's a video for now. The market is moving up very, very nicely, as you can see right here. Like I said, I am bullish on Bitcoin. Short term, though, be careful for volatility. It's probably going to be very, very volatile. But that's it. I mean, you can see some coins are very, very bullish right here. So there are things to trade. Trade carefully. Thank you all for watching the stream. I sincerely enjoy these streams a lot. All right. Right now, with the markets being down quite a bit, I do not always enjoy making videos, but I still make them. But these live streams are always a blessing. It's a blessing to have you all here. I want to wish you all a great evening, a great rest of your afternoon, a great morning, potentially already almost, for those of you watching from Asia, even though, well, it's probably in the middle of the night. But no, thank you for watching. I'll be back tomorrow morning with good audio videos and updates. So